Hello everybody, very good evening. Hope you all are doing really well. Please confirm me on the chat box if I am audible and visible clearly or not. Yes, please confirm me on the chat box if I am audible and visible clearly or not. Very good evening. Yes, please confirm me on the chat box if I am audible and visible clearly or not. Yes, I can also check on my device and I can read your chats as well. Very good evening. Perfect. Okay, this is amazing. Very good evening. Very good evening. So, very good evening, everybody. Hope you all are doing really well. This is CS Supreet Agrawal, your faculty for ACCA AA, AAA, and law subjects. And my dear friends, today we have met for a very special session on the question solving of AAA chapter number 8, which is evidence and testing. My dear friends, this particular chapter is going to be very important for your examination as well, because when we talk about clearing the AAA examination, there are few chapters that are considered very important, like chapter number 7, 8, 9, chapter number 2, then chapter number 12 and 13. So all of these chapters makes the very important pattern in the examination that all of these chapters are frequently asked in the examination. So this is very important for all of us to cover very thoroughly. So today, let's first discuss about what are the question patterns that we are going to solve today. Sir, are we only going to focus on chapter 8 or are we going to focus a little bit on chapter 9 also? So today's session is only for chapter number 8. My dear friends, when we talk about chapter number 8, there are two questions majorly. Number one is the papaya company. Okay, the source is ACC Stadia. And once we complete that, then the second question that is going to be there, sir, is the answer so big? Yes, the answer is so thorough. But when we focus on the second question, it is going to be the pulp company. So this is going to be very important for us to solve both the questions today. Now, if I focus on question number 2, what are the possible questions to discuss why the identification of related party and material related party transactions can be difficult for auditors? Number 1. Second is in relation to the receivables recognized on the statement of financial position, comment on the matters you should consider and recommend further audit procedures also. So these are important, and discuss the quality management issues raised by the auditors, audit seniors comments. Okay, so these are there. But when we talk about question number 1, there is something very different over here. When you go for the question number 1, you will see that there are different questions. Number 1, explain using examples the reasons for performing inethical procedures in risk assessment stage. Okay, number 1, 6 marks. Then discuss the limitations of performing inethical procedures at the planning stage, limitations. Then explain and differentiate between overall audit strategy and audit plan, very important question. Then there are certain case study based questions. So what we are going to do is we are going to solve the question number 1 first. Okay, the question number 1 first, and our strategy is going to be similar from what we have followed in the past also, which is we are going to read the questions, we are going to make a summary notes. You should have a blank piece of paper or a notepad available in front of you while solving this question, so that you can also make your notes. And then at the end, I am going to give you certain time to solve this particular question, and then we are going to go and discuss this question, and then we are going to read the answers as well. So that will help us have a complete understanding of this particular chapter. Now, papaya company, ISA 315 revised 2019, identifying and assessing the risk of material misstatement. See, a lot of you ask, do you need to remember ISAs and essays in case of the AAA paper? So you do not need to remember it, because a lot of times the reference is readily given. You do not need to mug it up. Okay, now, requires the auditors to perform inethical procedures as a risk assessment procedure. Required, number 1, explain. This is the big file, so it might happen once or twice. Page number 90. Let's see, where are we? Oh. Somewhere nearby. Yes. So this is the question. Now, papaya company ISA 315 requires the auditor to perform inethical procedures as a risk assessment procedure. Yes, we all know that when we talk about the inethical procedure, so these are required to be performed at the 3 stages. One is the planning stage, another one at the execution stage, and then third one at the completion or review stage, and we all know about it, right? Now, required, explain using examples, not just explain, using the examples, the reasons for performing inethical procedures in risk assessment, the reasons for performing inethical procedures in risk assessment. So we have to give thorough important pointers about the inethical procedures. Then second, discuss the limitations of performing analytical procedures at the planning stage of the audit. So what we have to do is we have to identify the reasons for performing and then the limitations of performing the analytical procedure at the planning stage of the audit. These two are very, very important questions. My dear friends, I would suggest that you please solve this first. Take 3 to 4 minutes. Solve, draft your answer for this one. We will be discussing about it. Then we will be reading the answer of it. And then we will be moving further to it. That is how we need to understand part by part approach and we have to solve it. Okay. So please take 2 to 3 minutes. Draft your answer. Then we will meet again. Okay, I feel this should be the sufficient time to draft a rough answer for this. My dear friends, let's try to discuss it one by one now. When we talk about the reasons for performing analytical procedure in the risk assessment stage, please try to understand this one thing. If you remember the basic lecture that we have covered, we have discussed about the stages of the audit, right? We have discussed about the planning stage, the execution stage and also. So what we need to understand in particular here is whenever we talk about any of the stage of the audit, it is very important for us to have a previous knowledge or to develop our understanding for the current year figures. Let's say if we are performing analytical procedure at the planning stage or at the risk assessment stage, what we are trying to do is we are trying to understand what are the possible risks, what are the potential risks in the company, which area requires significant attention, significant efforts, significant audit procedures from the auditor side. We are also trying to evaluate our understanding whether that is still true if we have a previous understanding. If it is a first year audit time, we are trying to understand how the figures are flowing across the company. So all of this is a very important part and the reason to evaluate why analytical procedures are useful at the planning stage or the risk assessment stage. Now, when I talk about the limitations of these analytical procedure at the planning stage, so when we perform the analytical procedure at the execution stage or at the completion stage, one thing is very sure that we might have a little more data. But when we are performing the analytical procedure at the planning stage, we might be performing it either exactly after the year end or before the year end or even on the draft financial statement. That makes it very difficult for us to first of all rely on the numbers. A lot of times what could happen is the year end adjustments might not have been done. A lot of times what might happen is that when we talk about the analytical procedures, it requires plausible relationships between various information. For example, other information might not have been drafted by now. So how we will be able to test the items, how we will be able to derive the relationships between them. Even if one factor changes, it will have a large impact on the other factor also. So that is why this particular limitation becomes very big. Okay, so this is very, very important. Now let's go. I hope you might have also written the similar answer. Now let's go and read this particular answer first, then we will be moving further. Okay, so this one is there, the reasons. Okay, in article procedures and risk assessment states the reasons. Okay, can help the auditor to develop an understanding of the entity and highlight matters of which the auditor was previously unaware. Okay, then particularly important in the case of a new client, like we have discussed. Okay, comparison of margins made by the entity with those of its competitors will provide the auditor with some degree of knowledge also. True. Then identify aspects of the financial statements which appear to carry a high risk of material misstatement. Okay, unexpected trends and unusual relationship between pieces of financial data were revealed by the analytical procedures. Okay, so all of these are important. For example, procedures may reveal that revenue has increased by 20% compared to the previous year, but that the budgeted increase was 5% only. So from where the increased variance is coming from. Now for these reasons, performing analytical procedures can help the auditor to identify and prioritize potential risk. Okay, potential areas of risk. Now let us talk about the limitations. So based on draft projected figures, okay, up to the year end, or the extrapolated figures also sometimes. Okay, then extrapolating figures to cover a 12-month period is not always easy to do, especially for a seasonal business also. True, because it is not always even. Then okay, then year end close procedure might not have occurred. Elimination procedures, elimination entries might not have occurred. Any year end adjustments, volume discounts and all might not have occurred. So information might not be very, very reliable. Then measurement, recognition and presentation of financial information may be very different. So care should be taken when extracting figures from management accounts. Okay, because generally as the first version, we will be getting the figures that has been reported on the management accounts only. Now, some entities, especially smaller companies, may not have a complete or formal reporting system during the year, making analytical procedures before the year-end accounts have been produced difficult, because a lot of entities have this procedure, that is the FSCP procedure, which is financial statement closure procedure, that is applicable not in the quarterly manner, especially if it is not a listed entity. It is majorly applicable on the annual basis. And when we are performing the risk assessment procedures and especially the analytical procedure stage, we might not be getting those financial statements which have all of these things incorporated. So that makes it difficult and a limitation for it. Okay, so this was the first question that we needed to answer and we have done it. Now let's talk about the second part of the question. This is major question number 1 only, but sub parts are there, right? So what we have done is we have answered sub part 1, sub part 2. Now let's jump to question number B here. Okay, question number B here, which is explain and differentiate between the overall audit strategy and audit plan. Now this is something that we have discussed in detail in the basic lecture also, and then when we were discussing about 300 and 500 series also, then also we have thrown much light on this particular topic. So let's discuss about it. Overall audit strategy and audit plan, 4 marks answer, 2 points for each. Okay, please try to draft it within 2 to 3 minutes, just a rough draft, then we will be discussing about it and then we will be going for the answer reading also. Okay, so I feel this is the sufficient time. Let's discuss about it. When we discuss about the overall audit strategy, what do we mean by it? What we need to understand here is, when we talk about the overall audit strategy, so the meaning here is that we are trying to decide the scope, direction of the audit. When we talk about the audit plan, what we are trying to discuss about how the exact procedures would be carrying out, what would be the starting date, what would be everything, right? When we talk about the audit strategy, we might be discussing about the overall scope, what would be covered. But when we talk about the audit plan, there could be the exact details that might be covered. When we talk about the overall audit strategy, that might be having a broader scope of the engagement. But when we talk about the audit plan, that has the detailed scope of the engagement, detailed understanding of the engagement. So these are very, very important for us to understand. Now let's discuss about it and see what is the points that are written over here. So our overall audit strategy does what? Sets the scope, timing and direction of the audit. Okay. Then timing refers to establishing deadlines for completion of the work and key dates for expected communications also. Okay. When we talk about scope, so scope involves determining the characteristics of the audit line, such as location, relevant financial reporting framework, etc. Okay. Then the overall audit strategy should lead to the development of the audit plan. That is something that we know, which is broader. So we say audit strategy is broader. Then audit plan, like we discussed, is more detailed than the audit strategy. Okay, includes a description of risk assessment procedure, the exact nature of audit procedure that needs to be performed. General purpose of developing the audit plan is to design audit procedure which will reduce audit risk to an acceptably low level. The difference between the audit strategy and the audit plan is therefore that the strategy is the initial planning to ensure there will be adequate resources allocated to the audit engagement in response to an initial evaluation of the entity's characteristics, whereas the audit plan is a detailed program of audit procedures. Okay, so all of these things are very, very important. Now, with this, we have completed the second part also. See, my dear friends, whenever there is a direct definition kind of thing, for example, this one, I'm not explaining you anything over here because that is something that we have already discussed during the concept lectures. If there would be anything new, then we will be discussing about it. Now, let's go to the part C of the question today. Okay, let's discuss about part C. Let's discuss about what? Part C. Okay, part C. Okay, part C is, it is 1st July 2025. My dear friends, we do not know whether it is the year beginning or the year end. You are the manager responsible for the audit of Papaya Company, a listed company which operates a chain of supermarkets. Okay, with the year ending 31st July. So this is 1 month before year end. 1 month before year end. 1 month before year end. Okay, this is important. There are 3 business segments. 2 segments are supermarket chains which operate under internally generated brand names, and the third segment is a new financial services division. The first business segment comprises stores such as Papaya Mart. This segment makes up 3/4 of the supermarkets of the company and are large out-of-town stores located on retail parks on the edge of towns and cities. These stores sell a wide variety of items, okay, including food and drink, clothing, households goods and electrical appliances. In April 2025, which is roughly 3-4 months before the year end, the first overseas Papaya Mart opened in Farland. Okay, this expansion was a huge drain on cash resources. Drain as in it was a negative point, as it involved significant capital expenditure, as well as an expensive advertising campaign to introduce the Papaya Market brand in Farland. Okay, the second business segment comprises the rest of the supermarket. So one is the Papaya Mart and another one is rest of the supermarkets, okay, which are much smaller stores. Okay, so these are smaller stores located in city centers and branded as Papaya Express. Okay, so these are Papaya Express, Papaya Mart, Papaya Express. The express stores offers a reduced range of products, so little lesser products, focusing on food and drink, especially ready meals and other convenience items. The company also established a financial services division on 1st August 2024. 1st August 2024, roughly 2 years back, 1 year back, which offers loans, insurance and credit cards to customers. Okay, the following information was provided during a recent meeting held with the finance director of Papaya. All of the matters outlined in the notes below are potentially material to the financial statement, so we can assume that all of these things are material. Okay, let's try to understand it now. So notes from meeting held on 29th June 2025. Let's discuss about this. On 31st March 2025, Papaya received a notice from a government body. 31st March 2025 as in 4 months. 4 months before year end. 4 months before year end. 4 months before year end, right? that it is under investigation along with 3 other companies operating supermarket chains for alleged collusion and price fixing activities. So it is not the only one that has been fixed, but there are other companies also, and there's a charge that all of them have colluded. If it is found guilty, significant financial penalties will be imposed on Papaya company. Understood? The company is vigorously defending its case. Now, to help cash flows in a year of expansion, the company raised finance by issuing debentures. So, company has to raise finance by issuing debentures, which are potentially convertible into equity on maturity at the later stage also, roughly 5, 6 years after. To manage the risk associated with overseas expansion in May 2025, the company entered for the first time into several forward exchange contracts, which end in September 2025. So, there's a huge exposure also, forward exchange contracts. The contracts were acquired at no cost to Papaya company and are categorized as fair value through profit or loss financial instruments. Okay. The property market has slumped this year and significant losses were made on the sale of some plots of land which were originally acquired for development potential. The decision to sell the land was made as it is becoming increasingly difficult for the company to receive planning permission to build supermarkets on the land. Land is recognized at cost in the statement of financial position. Papaya company has 35 warehouses which store non-perishable items of inventory. Papaya company has 35 warehouses which store non-perishable items of inventory. Due to new regulation, each warehouse is required to undergo a major health and safety inspection every 3 years. All warehouses were inspected in August 2024 at a cost of 25,000 for each inspection. Oh my god, that's a huge 35 warehouses into $25,000 each. Oh my god, big investment. Okay. Now, using the information above, explain the information that you would require in order to perform analytical procedure during the planning of the audit. Okay. Then second, evaluate the risk of material misstatements to be addressed when planning the final audit for the year ending 31st July 2025. Your answer should be presented in the form of briefing notes to be used at the audit planning meeting. So this is not a report, this is an internal document. Okay. Then professional marks will be awarded, that we already know, right? So this is the 35 marks question. Please draft your answer for both and then let us know. Please draft your answer. Please take 5 to 7 minutes. I would suggest please take up to 8 minutes. This is 21:27, that is 9:27. Let's meet at 9:35 to discuss about this particular answer, and then we will be discussing about the potential answer also. We will be reading the answer also, and with this question will end. Then we will move to the next question. Yes. Okay guys, time's up. So now when we discuss about the information that we would be requiring in order to perform in-article procedure during the planning of the audit. So what is more important to understand is whenever this question is asked, you need to understand that how much you can segregate the information. The more you can segregate the information, the better in-article procedure you can perform. So in this particular case, when we discuss about it, so we can see that the first point is the papaya mart. The first point is what? The papaya mart, that you should have a separate data for. If it is possible, then it will help you evaluate it much better. Then when we talk about the second thing, then it is the overseas operations in Farland. That is very important. Overseas operations in Farland. Okay. Then the third thing that we should note down here is the Papaya Express. If you can get more information on this Papaya Express, that is also very good. Okay. And then when we discuss about the fourth one, then the warehouses. Warehouses also very important. Anything else? No. Warehouses, that is also very, very important. So if you can get more data on this particular thing and segregated data, then it will help you evaluate the margins in a much better fashion. You will be able to understand the data much better, and since you will be able to do both of these, then you will be ultimately able to do the in-article procedures in a much better way. Okay, so that is the understanding here. Now let's go and read the answers also. So when we go and read the answers here, what is more important for all of us to understand is the segregated information is the king here. So it is important that the information is disaggregated, as Papaya operates in different business segments and different geographical locations also. First thing is Papaya Mart, we have written. The operations in Farland, we have written by the name of overseas operations. Then the Papaya Express chain of supermarkets and the new financial, oh my god, this is something that we have forgot. We have written warehouses, but the new financial services division is very, very important. So this becomes very important. We have missed it, right? So that is very, very important for all of us to understand. Okay. Now let's discuss about it. The information should be separated out as above to enable in-article procedures to be performed on each separate component of the business, as each component is likely to achieve different margins and returns on capital. Calculating ratios and making comparisons for the company as a whole would be relatively meaningless here. Okay. Now, in-article procedure should be performed on the operations in Farland also. The financial services division will have a completely different profit structure, cost base and return on investment than the retail division, and so must be analyzed separately. All of this is very, very important. Auditor should also request any information about new accounting policies or estimation techniques which have been used this year. It is also useful to make comparisons to similar companies in the same industry also. So all of these are important. With this, we have completed the first question. Now when we go to the second part of the question, which is evaluate the risk of material misstatement to be addressed when planning the final audit for the year ending 31st July 2025. Your answer should be present in the form of briefing note. Risk of material misstatements. My dear friends, here when we were reading the case study, we have noted down certain points, right? So let's discuss about each one of these pointers. Okay. Number one, they are internally generated brand names, so they cannot be recognized in the financial statements. We have to evaluate, check whether they are presented. If they are presented, we have to de-recognize it. Okay. Then there is overseas operation. So overseas operation could come up with newer business challenges, newer terminologies, newer consolidation requirements. All of that needs to be taken care of. Okay. Significant capital expenditures, so cash flow issue because of this, and we have to issue the debentures and then convert it into the equity later on. So we have to write that also. Then we have to discuss about investigation that is being conducted. Okay, investigation that is being conducted, and foreign exchange contracts, forward exchange contracts, all of that. And then new regulation, each warehouse is required to undergo a major health checkup, and here this inspection will take a lot of time, right, and money also. So all of that we need to mention. Let's see how much would match. Alleged collusion and price fixing, we have mentioned. Convertible debentures, we have mentioned. Forward exchange contracts, we have mentioned. Inspection of warehouses, we have mentioned. Disclosure of operating segments, this is something that we should have mentioned but we didn't. And then finally, the internally generated brand name is also something that was important and we have mentioned it. My dear friends, let's try to understand what has been written inside it. Okay, just the basic points. Okay, so Generally what happens is a lot of students feel that we have to write something very technical under this. No, the core marks is to identify the issue, and then you have to use the information that is given in the case study to particularly understand what all points from the case study you can mention it under here. Once you have done that, you will be getting the marks. So do we need to write the similar number of lines, similar quantity of data to get the marks? No, you, if even if you write 2 to 3 lines or 4 lines as per the requirement, then also would suit. So it appears that several companies are under investigation for breaching regulations. There is a risk that the financial statements do not accurately reflect the situation as either a provision or contingent liability depending on the evaluation of the potential outcome of the case. Okay. Convertible debentures. So this is because the company does not know if it has an obligation to pay cash on the redemption of debt, or whether the debt will be settled by an equity distribution. So there would be a classification issue that the company would be facing. Forward exchange contract, they must be recognized in the statement of financial position at the year end as a financial asset or a financial liability, depending on whether the terms of the derivative contract are favorable or unfavorable at the reporting date. Okay. Land held for development potential. Now this is also very important. There are indicators that the land could be impaired at the year end. Some land was sold at a loss during the year, and it seems that planning permission for the development of the sites is becoming harder to obtain. Okay. Inspection of warehouses. A new regulatory requirement has resulted in an inspection of all the warehouses operated by Papaya. The risk is that the cost has been expensed. In other words, treated as an operating expense. This will result in understated profit and understated current assets also. See, this cost of inspection should be capitalized and then depreciated over the period to the next inspection, because this is for 3 years. What if, sir, this was of 1 year only? Then it should be expensed off. But since it is conducted once in 3 years, it should be capitalized and then depreciated. Disclosure of operating segments, because it has multiple segments, so it has to be reported under IFRS 8 operating segments. Then internally generated brand names, like we have discussed, they are internally generated, so they cannot be recognized as assets. The risk arises from significant expenditure on the launch of the brand in Farland. This is all very important, and with this we have completed question number 1 altogether. Now my dear friends, let's discuss about it, that we are going to conduct the same session for question number 2 as well. That is, we are going to continue this session and we are going to solve question number 2 as well. However, let's take a 2 minutes break, then we will be going for question number 2. It's a short question, not the detailed one that we have solved, but it's a short question but an important one. So let's try to take a 2 minutes break and then we will be moving further to question number 2 here. Yes. Okay, I hope this was a sufficient break. So now let's start with pulp company. Okay, pulp company. Again, the source is ACCA Study Hub only. It is 1st July 2025. Okay, you are an audit manager responsible for providing hot reviews on selected audit clients within your firm of chartered certified accountants. Hot reviews as in before the issue of the audit reports, right? You are currently reviewing the audit working papers for Pulp Company, a long-standing audit client for the year ended 31st January. So you are sitting after 31st January as in February, March, April, May, June, after 5 months, right? After 5 months from year end. Okay, the draft statement of financial position of Pulp Company shows total assets of $12 million. $12 million. Last year it was $11.5 million. The audit senior has made the following comment in a summary of issues for your review. Pulp Company's statement of financial position shows a receivable classified as a current asset. Okay, shows a receivable classified as a current asset with a value of $25,000. Okay, the only audit evidence we have requested and obtained is a management representation letter. Is that sufficient? No. That the amount is owed to Pulp Company from Jarvis Company. That Jarvis Company is controlled by Pulp Company's chairman Peter Sheffield, so it's a related party, and that the balance is likely to be received 6 months after Pulp Company's year end. That is on 31st January, from 6 months from 31st January. So February, March, April, May, June, July, 31st July. Okay. The receivable was also outstanding at the last year end when an identical management representation was provided, and our working papers noted that because the balance was immaterial, no further work was considered necessary. Okay. No disclosure. See, here this time it is $25,000 only, it's still immaterial only. $25,000 in front of $12 million, nothing. But still, we have to do certain procedure because it was there in the last year also. No disclosure has been made in the financial statements regarding the balance because it's a related party also. Jarvis Company is not audited by our firm, and we have verified that Pulp Company does not own any shares in Jarvis Company. Okay. Discuss why the identification of related parties and material related party transactions can be difficult for auditors. Then second question is, in relation to the receivables, comment on the matters that you should consider and recommend further audit procedure that should be carried out. My dear friends, let me give you certain guidance over here. When we talk about discuss why the identification of related parties and material related party transaction can be difficult, so we have to discuss about that management might be hiding, management might not be aware, all of those points. So what could be possible? Okay, why it is difficult? Then when we talk about the second point, B1 and 2, so comment on the matters that you should consider for what? For the receivables recognized. Okay, so what documents you will be requiring, what audit procedure you will be performing that. Then further audit procedure as in the audit procedure. So why it is difficult? Then second thing is what you should consider, what you should inquire about, and then third thing is the audit procedure. That is how you should draft your answer. Please take 5 to 7 minutes. Okay, and then let us discuss about the potential answer that could have been there. We'll discuss about it, and then we will be going for the reading of the answer as well. Okay guys, so I think this is the sufficient time. Now let's discuss about why identification of related party and material related party transactions can be difficult for the auditors. So see, number one thing could be that there are certain companies which are hundreds of years old, right? A lot of managers, a lot of executives might not be aware about the related party transaction that they have. Second thing is there could be certain errors in the reporting also. A lot of structures are so complex that it is very difficult to identify whether they come under the purview of the related party or not, right? So all of this is very, very important. When we talk about the related party transactions, there could be certain immaterial amounts that might not have been reported as a related party transaction and might be very difficult to identify also. So all of this thing makes the answer for the first one. Okay. Now when we talk about what points you should consider, what matters you should consider for the receivable balance is, first of all, whether that receivable balance is intentionally kept hold, due, or whether is there any particular reason for it which is justified for a neutral party also. Second, what is the intention of the management? Do they want to actually receive it or not? Okay, that is one thing. Or do they want to keep it due, or do they want to write it off? Third thing is, what are the supporting documents to say that that particular amount is appropriate? So all of these things would make the comment on the matters. Okay. Then recommend further audit procedure that should be carried out. So further audit procedure, inspect what the supporting documents that will tell us that this is the party balance. Confirmation, we should take a confirmation from the relevant party also, who has to pay us, whether they agree with the amount that they have to pay us or not. Then ICAIORR, right? I has been done, C has been done. Then in article procedure, so we have to evaluate that whether that amount that is appearing, whether that is appropriate or not, whether is there any movement, that is there was a total balance, something has been paid, whether that movement is appropriate or not. We have to match it with the other non-related party receivables also, whether what is the quantum of it. Then we will be discussing about the ICA and then inquiry. So we will be inquiring about what is the intention of the management behind keeping it on hold. What is the discussion or dialogue between the management of both the companies? Is there any risk, any provision that should be identified for that, any write-off that should be identified for that? Okay, that is the inquiry. Then we will be doing the observation also, that what has been the records in the past areas, whether that particular client, whether that particular entity has made the payments or not, or whether it has been written off. We will be doing the recalculation also, whether if there is any movement, then whether the calculation is coming appropriately or not, and whether the internal controls are appropriately working for that or not. So that will make the answer for the second one. Now let's go and read the answer that is mentioned over here. Okay. So when I talk about this particular thing, matters to consider, then first thing is materiality. So it is 0.2%, because out of 12 million, it is only $25,000 that we have discussed immaterial in monetary terms. However, the details of the transaction could make it material by nature. That is, qualitative materiality is also very important. The amount is outstanding from a company under the control of Pulp's chairman. Readers of the financial statements would be interested to know the details of this transaction, which currently is not disclosed. Elements of the transaction could be subject to bias, especially the repayment terms, which appear to be beyond commercial credit terms also. A further matter to consider is whether this is a one-off transaction or an indicator of further transactions also. Now, accounting treatment. So it is necessary to establish where there is a related party transaction, as two entities are not necessarily related party on the sole grounds that they have a director or other member of key management in common. The audit senior states that Jarvis is controlled by Peter Sheffield, who is also the chairman of Pulp. It seems that Peter Sheffield is in a position of control or significant influence over the two companies, and the two companies are therefore likely to be perceived as related only. The following are therefore required to be disclosed: the nature of the related party relationship, the amount of the transaction, the amount of any balances outstanding including terms and conditions, and any allowances for receivables and associated expenses. As no disclosures has so far been made in the notes to the financial statements, if not amended, the audit opinion on the financial statement should be qualified with an except for disagreement, that except for this item everything is true and fair. In addition, the basis for qualified opinion paragraph should include all the information that should have been disclosed in the notes to the financial statements. Now, valuation and classification of receivables. So a receivable should only be recognized if it will give rise to future economic benefit. It appears that the receivable is long outstanding. If the amount is unlikely to be recovered, then it should be written off like we have discussed. Although a representation has been received indicating that the amount will be paid to Pulp, the auditor should be skeptical about this claim, given the same representation was given last year also. The amount advanced to Jarvis could effectively be an investment rather than a short-term receivable. Correct classification on the statement of financial position is crucial for the financial statements. Okay. Then there is no indication in the scenario that the auditors have asked for and being refused any evidence. Now let's discuss about further audit procedure that should be planned. The exact nature of the control, a comment on whether in his opinion the balance is recoverable, a specific date by which the amount should be expected to be repaid, a confirmation that there are no further balances outstanding from Jarvis or any further transaction between Jarvis and Pulp. Then develop an understanding of the business purpose of the transaction from discussion with Peter Sheffield, review the terms of any written confirmation of the amount. See, all of the similar procedure that we have discussed. Review the board minutes also and obtain the most recent audited financial statements of Jarvis and ascertain whether Peter Sheffield is disclosed as the ultimate controlling party or disclosed as a member of the key management personnel or not. Perform a liquidity analysis to establish whether the amount can be repaid from liquid assets or not. So with this, we have completed the second and the third part, right? This one. Now let's go to the C part. We have completed A part, we have completed the B part. Now let's go to the C part. Discuss the quality management issues raised by the audit seniors comments. Discuss the quality management issues. Okay. Discuss the quality management issues. So when we discuss about the quality management issues, what is more important for us to understand is that there are several issues which indicate deficiencies in the firm's system of quality management. The planned audit procedure appear to be inadequate. Further tests should have been performed to confirm the completeness, existence and valuation of the balance. In last year's audit, the management representation was accepted as a sufficient evidence in relation to the receivable. Possibly the item was not identified as a related party transaction. Otherwise, this would not have been a sufficient evidence. At the planning stage, it is a standard procedure to identify key related party entity and to plan procedures specific to them. But inadequate planning has resulted into missing of this particular procedure. Work on receivables is often carried out by a relatively inexperienced member of the audit team. Generally, yes, it happens. Audit juniors may not appreciate the relevance of the related party relationships or the complexities regarding materiality. Insufficient review by the audit manager has been performed on complete working papers, which then failed to spot the weakness of the management representation as a source of evidence also, because these were the notes. So these are the pointers that are very, very important for you to understand. Now, question number 3 is a homework. You should solve it once, and just in case if you face any trouble, please feel free to reach out to me, because the questions, if we see, are somewhat similar only. Okay, that should be performed, explain the procedures, comment on the matters that should be considered, right? Comment on the matter that should be considered, identify and explain the potential implication for the auditor's report. So all of these questions are very, very similar to what we have already covered. Now after this chapter will get completed. So my dear friends, we have solved 2 questions here. Now I would request you to solve the third question independently. Just in case if you face any trouble, please feel free to let me know. I would be happy to discuss the question with you and to provide you the solution as well. All the very best. See you and very, very good luck for your examination as well.